We are back. The markets are open today. They're struggling for direction as we are a day away from the vote on the debt ceiling bill. It is going to be a very interesting one, to say the least. Excited to see how markets respond. We have more data coming out, and we have to talk about Nvidia as they cross $400 a share and briefly touch a $1 trillion market cap. That's absolutely crazy. Before we dive into all those things, please hit the like button, subscribe to our channel if you have not yet. Nothing that Kevin or I say is financial advice. We're not financial advisors. We're a few guys who love the markets. We're going to try to do the best we can to help piece all this craziness together. But with that being said, do your own research before you make any buying and selling decisions. Kev, we're seeing, like I said, the markets feel like they're struggling for direction right now. Crypto, I can't tell if it wants to rip or if it wants to dip, man. The optimist tells me it wants to rip, but the realist in me tells that we're going to need to see a major pullback because there's just too many things in the macro that do not look pretty.
Yeah, I mean, I'll be honest with you. If you look at the charts right now, it could go one of either way, one of two ways, right? But clearly, it's going a third way, which is sideways crab walking, and it's just ranging. I want to see where we go. Obviously, in the next move, I think that the next move is still down if we're looking at the macro, but I wouldn't be surprised if we make a smaller move down before making another move up. But if we're looking at, TRED5, we're seeing resistance for the Dow. Nasdaq's obviously leading the way for the indices. What's leading the Nasdaq? Probably Nvidia and a lot of these other tech companies that are just absolutely kicking ass in the face of a recession. So, obviously there's just a ton of money pulling into these markets before this recession kicks everyone in the balls. But it's just a really wild time because what's going to happen? This is the summertime where everything's supposed to be slowing down, and clearly we're like seeing the price rip. And today was an absolute. You text me this morning. I was surprised to see Nvidia that high, but I'm also not surprised too because this is definitely a good short squeeze. People probably know that this market is bullshit too and want to short, make some money. But if you catch early shorts, when the price is going up, they got to buy back in, and that just pushes the price up further. So that's the market we're in right now. We're just trying to grab as much liquidity, as much money as we possibly can, but at the same time, no one is confident in the decisions they're making, and it really shows with price struggling both directions.
Yeah, the shorters of Nvidia came in. They saw that price at 389 at the close on Friday. They're like, oh yeah, nothing else is going to push this up. Then my guy Jensen walked in, strutted into Computex over in Taipei, dropped some bombs, and now it is go time. I don't know what's going to happen to the price of Nvidia in the next month, 6 months, 2 years. I think it'll keep going up. We'll probably see some pullback first. Each pullback, though, is an opportunity to potentially accumulate some more. I'm incredibly bullish long term on what they're doing. They are positioning. I gave the comparison to you before we started recording that if we think AI is the next gold rush, Nvidia is building the shovels and pickaxes for that. Like, they're going to have their hands in everything AI related. They announced their DGX GH200 massive memory supercomputer for generative AI. Google, Meta, Microsoft all have some involvement here. The only one who doesn't is Amazon because they're doing their own thing. But guess what? Their thing is not going to be as good as Nvidia's. Sorry, it just isn't. They're way behind. They got a lot of publicity around the Avatar cloud engine for gaming yesterday. I think that's really cool. I also think it's years away from any relevance because, as we'll discuss with some of the student loan stuff, I think gaming is going to continue to be a very popular industry and a lot of money move into it, but maybe not as much as previous years with how tough times are for people financially. So I'm excited about what Nvidia has coming, what they're going to be putting out. They are the leaders right now in AI, and that is a great place to be. Obviously, others are going to be deeply involved with it, but I don't know. I believe in Jensen. I believe in Nvidia. And I'm just very, very grateful to continue to just hold this and enjoy it and watch and be along for the ride. And like I said, if we see a big pullback, that's cool. That's just another opportunity to buy some more.
Yeah, I think that's a great mentality, especially, I mean, that's a great call. Also buying Nvidia so long ago and continuing to hold onto it. That shows conviction. And yeah, I couldn't be more bullish on Nvidia and a lot of this AI stuff moving forward. Now, do I necessarily care about AI? Like, is it something that's going to affect my life? It might in the future, but for the time being, it really doesn't. But that doesn't mean that I shouldn't be involved with not be involved with it because I don't agree with her. I like it. There's always money to be made, and I do think that in the future, this one's going to be a huge. It's going to be extremely profitable, as it's been profitable for a lot of people, yourself included, since it first came out. My thing is, and I was telling you about this again before the show, was, is this a bubble? And I do think it is a short-term bubble that we need to see cool off for a little bit. And the main reason is it's pretty much driven the NASDAQ up, right? We've seen that, and a bunch of other companies just focus on AI. It's been the buzzword for the entire year so far, and very similar to the 2000.com bubble, or the dot-com bubble. Whatever. It's like all these companies that are extremely successful now absolutely got shit-faced and they tanked back then. I do think that we're going to see something similar with AI in a lot of these companies now in the short term, but I do think long term we are going to see extremely exponential growth. So I see a lot of people who are buying into this. They're hoping that Nvidia is going to keep going. We think that we're in a bull market because the price is going up. Price can go up in a bear market too. I think that the macro is the number one thing we need to keep an eye on. And, AI is going to be beneficial moving forward. I think it's also going to replace a lot of jobs and moving forward too. But for the time being, it has no real use case for a lot of basic Americans who are not going to have a lot of disposable income. Therefore, I do think that the price is a bubble, and eventually all that liquidity is going to be drained from the markets. The people who are doing the shorts a little bit too early, they're getting squeezed, and there's going to be a point where we're just going to need some consolidation where the price is going to kind of stay where it is for, I don't know, maybe a week or two, a little bit of time before we start to see the next move to the downside. But yeah, that's why the prices, I think, is moving up a lot. I think a lot of people are expecting this price to go down, but at the same time, it's like, you're going to lose a lot more money if the price keeps going up. So you got to buy back your stock so you don't get wrecked. And that's why the price can keep going up. So with Nvidia, I'm bearish in the short term, but I'm not short, if that makes any sense.
Yeah, for sure. And I think these next 2 weeks should be that, consolidation before a move to the downside. As we've discussed, kind of looking at the calendar, we have some reports coming out this week. Not a lot. I looked ahead. There's not a ton next week. But the week after that, that second week in June, we get inflation and the FOMC. And the latest FOMC rate hike probability is now 63% chance of a 25 basis point hike. I mean, been calling that for a while. I also said last week, I think we're going to hear discussion of a potential 50. If the JOLTS doesn't come out great, if the unemployment rate on Friday isn't great, and then, the Fed is going to be in a real shit position if the Tuesday before the rate hike decision, and the meeting start, they get a bad inflation reading. I mean, they're going to be in a rough spot
it's
if they
25
see
plus.
that.
We need to be.
Yeah,
I think we need to be open to 50, most likely.
I said it last week.
Yeah.
I think that we start to see that get potentially priced into the markets a little bit. Now we're hearing 25 in June, 25 in July. I wouldn't be surprised if we got 50 in June, 25 in July. Like, that seems like a very real possibility that would get us to the 6% range that Bullard was talking about us needing to get to. I hope that is where it ends. I honestly don't want to see it go any higher than that. I think it's already going to cause problems. It's already going to cause this, the incredibly high amount of debt to go even higher and stay there for longer. And then we add into that, the student loan debt that we discussed on yesterday's show. I saw in a article today, pre-pandemic. So these numbers could definitely be changing, but pre-pandemic, average student loan payment was $393 a month, with 40 million Americans paying student loans. That was about $15.72 billion per month in student loan payments. So that's a lot of money. That is a lot of money that people cannot put into other areas. They cannot put into, disposable, it's a lack of disposable income right there. That's going to hurt companies. That's going to hurt earnings. That is going to be impacted in stock prices. It's going to be impacted in crypto. It is very it's concerning for sure.
Yeah, it's really insane. I just don't know what these markets are doing, thinking that everything's going to be all right, man. Like, again, and here's the thing: even if it does get really bad to the point where we're pricing in 50 basis points, it's like this market has priced everything in, man. They got to be wrong at some point, right? It's just absolutely insane to be thinking that. And then, the student debt, if this bill gets passed, obviously everything gets moved up a month. Is a month a huge difference? No, but it's something that's a problem that, that's coming at you faster than you expect, right? So where we're going to be at the end of the summer, who knows? We could be in a terrible place. We could be in a place where we're kind of in that stagflationary period. But I'm absolutely just like, I don't know. It'll be really interesting to see what Wednesday brings us, because I think that's going to play a huge, nice
August.
catch. Nice catch. That was a great catch. But yeah, Wednesday we'll see if they bite the bait, and obviously we get a resolution. But I don't know. Seems like there's a little bit of disapproval right now in the House.
Yeah, like we said, this like the politicians here, they're wild cards, man. Like they're it wouldn't surprise me if, you know, crusty ass Marjorie Taylor Greene stood up and started going on her soapbox about something ridiculous, and that just drags things out. I don't know. What up, Ace? What up, Randy? Thank you for being here. It's a great day, and excited to be shooting the shit with you guys about the markets. But yeah, man, let's not assuming anything right now. People were assuming for whatever reason that there are going to be 3 rate cuts in the back part of the year. I don't know where they made that assumption from. It was a bad one. Okay. Like you cannot assume anything at this point. You have to be flexible. You have to be willing to really dive into the markets and, change your opinions based on the data. Like don't be betting on a hope and a prayer right now. Be betting on what's the most likely outcome.
Yeah, you can't spell assume without spelling ass, and I think it tells you a lot of their assumptions smell really bad because it's complete bullshit, just like this market. But it just is what it is. They've been wrong for the most part, even though they've been pricing and everything. They're forward thinking, but at the same time, they're not forward thinking to seeing bad events take place. And I think we're the opposite of that. We are forward thinking to seeing how these bad events might absolutely wreck the markets. That's the difference between macro and then just listening to what other people have to say and just going off of what your favorite bullish influencer is telling you. We're in
Yep.
a place where the truth sucks, but guess what? You can make money if you know what the actual truth is, not just hoping what someone says is actual truth. There's no money to be made in losing.
No,
I
there's
mean,
not.
if you're a loser, I mean, you can't make money short in the market, obviously, but
Yes, you
you know what
can.
I you know what I mean.
For sure. Are there any charts you want to look at?
Yeah, let's jump into Victoria's Secret. We will jump into Victoria's Secret because we talked about this a long time ago. My former place of employment, they've been getting wrecked. I told you people are going to stop wearing lingerie, and this bear market is getting to everyone. But let's pull up the DXY because guess what? That's still extremely high. DXY here we're looking at the weekly, and we could see that obviously it couldn't be a better W pattern there, right? Obviously, I would like for it to go test 105 because we've just made so much room to the upside, but we can't count out the fact that we are extremely overbought in the daily. We're almost at max out of the daily. 100 and 100 on the stochastic down here would be completely maxed out, but what is completely maxed out? The Nasdaq. But we'll get there in a second. You can see that daily is probably going to have to find some support. It's going to probably have to come down. I've been saying that, but however, the dollar continues to rip as I say that. So it'll be really interesting to see how this debt deal, and a lot of other companies, not companies, but how the debt deal plays out and seeing how risk assets react and change with that. I expect the DXY to test the 105.69. I do think that we'll get rejected there before consolidation, then we break through. It doesn't have to be that way. We could absolutely break through if something bad happens, like the U.S. not defaults, but loses its credit rating. I think that would push the dollar up as opposed to risk assets up. I don't think Bitcoin's going to react positively if something like that were to happen. I think a lot of people are going to sell off. But the DXY is still extremely strong. I mean, the fact that it's at 104, and if we look at what was it? Let's go to a month ago. A month ago, the DXY's low was around 100.845. This month, we hit a height of 104.5. So we're kicking ass this month on the DXY, right? There's no question about that. And I don't think that going into this summer, we are done quite yet. We can see how oversold the DXY is. I do think that, tomorrow's the monthly close. We'll see how this moves up, but we're not done. They're not done, in my opinion. I still think on the macro, if we look at this, there's still tons of room to go to the upside. Oops, I pressed the wrong button, but here, let's just delete that. We don't need that anymore. DXY strong. But yeah, that's what I'm seeing with the DXY. We can't count it out. And the thing that kind of scares me about this is also looking at DXY and Bitcoin dominance. So we'll just jump into crypto before we run into TradFi real quick. But Bitcoin dominance is extremely high still. I mean, obviously, we're completely overbought on the stochastic RSI, which means that the dominance is going to have to come down. The question is this going to come down because alts start to take off, or is it going to come down because Bitcoin's probably going to see a huge drop in the market? And then people are just kind of like spreading their money into, I don't know, USDT, USDC, because they're afraid of where to actually put their cash, but they want some exposure to crypto in some way. I don't know. People are weird investors, and it'll be interesting to see how they lose their money over these next 6 months buying. It's the truth, man. But yeah, it's very possible that BTC dominance goes down with the price of Bitcoin, but obviously these stable coins start to see a little bit of a run up. Doesn't mean that the stable coins are going to go to $2. It just means that people are going to keep their reserves on hand. So yeah, I think that we are seeing a little bit of a downtick here on the daily for the Bitcoin dominance, but the fact that it's still above the 50-day moving average, estimated moving average, tells me that we're still finding a lot of support on this line. And if we do see another push to the upside for Bitcoin, I do think that we're going to go above this 48.48%. I mean, the fact that it's still 48% of the entire market cap right now, when we've seen it drop from 31K, and what was that? 31K was like right around here when it was at 48.48%. And we're about $3,000 short of that right now. And the price is still higher than where it was when a few days ago, a few weeks ago. Bitcoin dominance is still extremely sticky for me. DXY is still extremely sticky. Something's got to give. Everything is kind of pumping right now. Which one's going to be the one that's going to lose in this game of chicken? I think it's going to be risk assets, but we're just going to have to wait and see. Again, this market is extremely resilient, and by resilient, I mean manipulative. And so a lot of people are buying in, expecting this thing just to be, a bull market, and everyone who is kind of sane and looking at things from a macro and from a technical point of view are just absolutely missed the entry. But I think that right now we are 100% in a place where something is going to break, something is going to give. It's a matter of time. And that's the unfortunate thing. You just got to be patient, because all the things that should be going down are not right now. And well, that's screaming, that's signals, red alarms, red flags are going off in my head just when I see all these things conflicting. So keep an eye on that. But that's all I got from Bitcoin dominance and DXY. But that is pretty much what I've been looking at for what I'm expecting in the market.
See, Kev, you missed out on those entries because you weren't listening to Jim Cramer and doing the opposite of what he said.
I don't even know what channel that guy's on anymore. Is he on CNBC still? Or is he just on
so.
Twitter?
No, he's on CNBC still and Twitter, which is why I'm a big fan of
Whose nephew
Bloomberg.
is he? Whose nephew is he? Like, to have his own show and just be wrong all the time.
He's had his own show for many years. People still listen to that guy, and they still. I don't know how many people listen to him and actually take his advice, or how many listen to him and do the opposite. But the inverse Kramer ETF has probably been on fire. All right, that's all you had there for DXY and BTC dominance. Everything else is still just kind of boring and chopping sideways, and we're back to it's all headline and data driven right now. I'm sure you have some sort of wave theory that you could talk to us about, but if we look at the Nasdaq, it's so much just a handful of companies. It's Nvidia, it is Tesla, it is, let's see, who else? Microsoft, Netflix is having a huge day, up almost 4%. It is, Meta has had an absolutely insane 9 months. So, so much of this is just focused around a handful of companies that are keeping everything else, keeping the NASDAQ higher, but valuations for many others have not been keeping pace at all. So maybe there's opportunity in some of those other ones. Maybe there's just an opportunity to watch everything take a big old dump when the time comes.
Yeah, man, it's wild. And we're looking at the monthly chart right here on the NASDAQ, and the NASDAQ is the indice of them all that is leading this pack, right? It's been kicking ass for the past how many months, but it feels like an eternity that the NASDAQ's been going up. And we look at the monthly chart, it's right here, and we're saying that's 3 months of positive growth. We had 1 month that was kind of red, and then we had a green month right before it. And that kind of red month, that could be hit or miss, right? That could just be sideways at that point. It's not a huge difference. But if we're looking at the NASDAQ here, if we're trading in this parallel channel, this is a bear flag 100%. But the fact is, it's been playing out for so long now. It's One, two, three, four, five, six, seven, eight. This is the eighth month. We're going to close tomorrow on the NASDAQ, see how the monthly plays out. Stochastic RSI is nearly to the overbought territory. Do I think we'll get to overbought? I do. I think that we're going to get just to the top of it. Do I think we're going to stay overbought for a period of time? A rational mind would say no, because we've just, absolutely just ran up like nonstop this year. But however, I don't underestimate, the power of bullshit and lying and propping up a market to the point where everyone's get exposed to it, and then the rug is just pulled from under. Again, I always bring up the Polygon Matic bear flag that we've been talking about since last year, where it traded in this parallel channel for the longest, like months, like I think like 9 or 10 months, and it finally broke, and it reached 152, $1.52 or $1.55 or something like that for Polygon, and then it got rejected, and we went all the way down to 79 cents. We wicked down to 79 cents, so that's a huge move, and I don't think it's done yet, right? Obviously, 30 cents by December 5th, but when I'm looking at this Nasdaq chart, this is going to break at some point. And the fact is, if we look at the NASDAQ on the monthly, okay, we're almost going to be overbought. We look on the weekly, we're at 100, 100. This is the most overbought that it can possibly ever be. Yeah, I mean, maybe we can go up a little bit more in price, but you'll break the stochastic RSI. It's at 100 right now. And I look at this and I'm thinking about, okay, maybe this is a corrective move to the downside. And this is my bullish case, right? Obviously, that this move to the downside is a three-way move, which means that it's not impulsive, and we're just making a correction for all the years of just pumping nonstop. But we're going to have waves within it, right? And I think that right now we are in this wave B, where it's going to be going to the upside. And it's kind of funny that this parallel channel, we're right above it. We just broke right above it, and we're completely overbought. So if we're completely overbought and we broke above the parallel channel, what does that mean? It's kind of resistance. We're seeing a little bit of red. You can't see it because of the B right there on the chart. I'll delete this for the time being. I know where everything is, but yeah, we're right here, and we're seeing red, and we're just barely in it. We're testing the top of it, but if we're completely overbought, that's resistance. We're going to have to come down at some point. And the thing is, on the weekly, and we look at the 50 and the 200 right here, they're still pretty close to each other. So if we start to see negative price action, we come from this completely maxed out overbought stochastic RSI to the downside. Maybe we go test this 50 moving average at, what is that, 12,727. That's a huge move to get to, honestly. But we've also seen how much of a move this has made recently. So I wouldn't be surprised if, just seeing some negative price action over the next few months, we do get below this 50 moving average. And then we could be a slow trickle before we start to move down. And then when this 50 crosses 200, and we might actually see the move to the downside, before the actual death cross happens. And by the time the death cross does happen, we could be at the, 75% through the move to the downside. It's very possible. But right now, when I'm seeing this, we're at resistance. I don't know how much higher it could go. It could go higher. I'm not going to lie to you. Again, we're looking at these short squeezes, and it's these few companies that are driving this price up. But I'm not going to stand here and say that this is a time to be extremely bullish, right? Again, I'm bearish. I'm not short on a lot of these things because short squeezes are very realistic, and they do happen. I look at the DXY and Bitcoin dominance a lot for me when I'm shorting in the market, because I want to see, is there a chance that the price can go up? You look at XRP today, XRP is shooting up. A lot of this stuff is based on news. And right now, I wouldn't be too exposed to the point where I think that I'm confident this is going to go down from here. I think that it's most likely going to go down. I'm not going to tell you that it's going to go down tomorrow, because I know how long this market plays out and how much time this takes for liquidity to be drained. We need some of these positions that are shorting the market up here to kind of slow down before we do see, some negative price action. And then we start seeing the big sales happen. And like, obviously this indice and other ones that are extremely overbought.
Yeah, we've seen the outliers perform well based off of earnings, fundamentals around them, news. But for a lot of them, like Nvidia included, I don't know what other cards they have to play right now that's going to keep pushing the price up. Like, we saw their Q2 guidance absolutely send it ripping. We saw the presentation yesterday in Taipei send the price up today. And that's awesome. And it's going to be great long term. But in the near term, what is going to keep that elevated? It's going to go back to, it's going to move with everything else in the market around inflation and Fed rates. And I think that is not a good thing. The pain is coming. It's going to happen, I think. personally.
That's
But
how we feel though, right? It's like we know it's coming, but the market's
yeah,
just like it's prolonging the pain, which means that it's gonna be max pain when it does come. It's
yeah,
such a disgusting thing that's happening because it's like the market, like again, I say this all the time. The market is super manipulative, and a lot of people are, turning on their convictions because the price keeps going up. And I'm not turning. I haven't closed any of my short positions at all. But this is just a point in the market where it's going to test you. It's going to push you to the limit of how much you're going to be willing to bend. And eventually, some people are breaking right now. And that's unfortunate because I do think that we're on the cusp of something terrible. The technicals are lining up with the macro. The macro is just building up. This is like a Jenga tower built on, or it's like a house of cards, pretty much, right? And we just keep going higher and higher with all the bullshit and the debt and all these problems with the U.S. and the world economy. And eventually, it's just going to be, one little gust of wind. It could be the smallest thing that's just going to make everything topple underneath it. And this market is just built upon absolute terrible foundation. And when it does go, it's going to be absolutely devastating. It just, again, you got to be patient. You got to wait, and you got to make sure that you're able to, you're comfortable in the positions and the plan that you have.
just always remember, and what was his name? John Maynard Keynes, Great Depression era economist. He said, "Markets can remain irrational longer than you can remain solvent," and that is
Yes,
so
that's
very
true.
true. It
It's a
is
great
so
quote,
very
man.
true, which is why, like, and it's accurate, right? Like these things
Yeah.
can stay irrational for as long as they need to. If you can't
Well,
remain liquid enough to be able to take advantage of it, you are missing out. So, as we've beaten this horse to death, and probably will continue to, of like, be patient, have cash on hand, be ready to buy the dips when they inevitably happen, and don't be over leveraged here. Okay, so I think that is going to wrap it up for
oh wait,
today.
we forgot
Oh,
Victoria's
go
Secret.
ahead.
We gotta
Okay,
go
Victoria's
Victoria's
Secret.
Secret, man.
Yeah, we have to.
Look at the lingerie. Again, I put this a long time ago. This might have been actually when we were talking back in. Yeah, this was back when we were doing it on Flowlio, the old podcast. But we built this parallel channel. We said that it was trading in it, obviously sideways range. Look at that, broke right out of it. And what is this from where we were? Let's say, I think we are talking about it back in probably November to where it is now. That's a 56% drop. That's wild, man. It just goes to show you that consumers in some areas, clearly the lingerie sector of the economy is taking a big hit. But again, you don't necessarily need lingerie, right? Maybe you need some underwears. But I remember when I was,
Listen, listen. In this economy, Costco, baby.
yeah,
Go get that Costco. Get the Costco
Kirkland
Kirkland
thongs.
brand underoos, the Kirkland socks. I mean, what are we doing out here? We can't be paying for expensive lingerie during a bear market. Like that's bull market activity.
I will say this. I used to work there during the bull market right after COVID. I couldn't find a job and I got hired by Victoria's Secret. So I was working there. And it's insane how busy Victoria's Secret was back then. But that was again because we had so much money in the economy. People were, how many Victoria's Secret credit cards did I sign up? I'll tell you the answer, a fucking ton. And they were just spending and they're making their payments. But I don't know if that's the case anymore. Maybe VS is gonna be coming after some people who put too much on their credit card bill and the debt's carrying over from month to month. But it just goes to show you, like, you probably walk into Victoria's Secret today and the price, there's probably a fifth of the amount of people that were in there at the time back in 2021. So I do think that the consumers are starting to see some negative reactions to credit tightening. But right here, this is a massive move, and I'm glad that we were able to say that it's probably going to break down from here. And that was faster than I expected, but yeah, that's a nasty brown streak for VS thongs.
We're gonna end it on that note.
Yes,
Thank
we
you
are.
everybody for watching today. We appreciate it. We will be back tomorrow. If you have not yet, down below there's some buttons that are very important: the like, the subscribe, the comment, and the share. If you could do one or all of those, that'd be amazing. It helps us out a ton. So thank you again for watching. Have a great day, and we'll see you tomorrow.
Take care, everyone.